higher across the board. Oliver Slopes with Blue Line Futures. All right, Oliver, what are you watching here?
Well, we're grain markets kind of like watching paint dry here to start the week. On Sunday night, we were a little bit lower. This morning, a little bit higher. And now kind of back to near unchanged. We're right at some pivotal technical levels for corn, soybeans, and wheat. For corn, really stuck in the middle of the 20 and 50-day moving average. The 50-day being support at 414.5, and then the 20-day and 100-day moving averages as resistance from 422 to 424. We need to see a break one way or the other to really get this market moving in a more of a directional basis. And I don't know if we're going to get that here this week with the lack of government reports really giving us new information to be the catalyst for those moves.
You know, I'm glad you brought in the government shutdown. One thing that we're still expecting is a Fed meeting. Fed Watch, CME Fed Watch, now expecting a 95% chance of another Fed rate cut this month. That's not affected in any form or fashion by this shutdown. Could it affect, however, ag?
Well, it potentially could, but as you had mentioned, you've got a 95% chance of a cut. So I think a lot of market participants are likely positioned for that. You probably see that more so in the outside markets with gold and silver continuing to rip to the upside on the back of the hopes of lower interest rates to come in the near future, not just this month, but past that as well. Potentially that spurs some momentum in some other commodities as well. That would certainly be helpful to see. Wheat is really the market that we're watching pretty closely. It has just been down in the dumps for several months on end. We're attempting our fourth straight day of gains here, which would tie the longest record of the year. But the wheat market still has a lot of work to do to really turn the tide. But I think if you're looking for a good risk-reward setup, I think the wheat market is probably going to be that commodity to keep an eye on.
Yeah, we're looking at Chicago wheat here and then Kansas City wheat, both in the red. And then you've got the Minneapolis contracts again moving a little higher. We're talking with Oliver Slope, Blue Line Futures. We'll take a break, be back with more. This is Market Day Report. Oliver Slopes with Blue Line Futures. Just looking here at livestock markets, it's been an interesting couple of weeks. Not sure which direction we're going. What are you watching?
Yeah, well, especially the last week, it's been abnormally quiet. We got used to seeing a ton of volatility. We're still seeing a little bit, but the trading ranges, as you had mentioned, are certainly starting to tighten, which I think is interesting. It's almost like the futures market may be building up some energy for a bigger directional move. And when looking at December live cattle specifically, we've seen the 14-day average trading range narrow from about $4 to $3.10, with the convergence of the 50-day moving average as support and 20-day moving average as resistance kind of working together. Last week's trading range is going to be, I think, the key levels to watch for this week's trade. On the top side, that's 236.45, and on the lower side, 231.75. I think a breakout above or below last week's range, and you could potentially see that spur some additional momentum in that corresponding direction. And then a similar setup in the feeder cattle market, looking at the November contract, 50-day moving average as support, that comes in near 350. We have not seen two consecutive closes below that since February. So some big technical levels to keep an eye on this week's trade for sure.
Okay, speaking of technical levels, had we dropped below $60 on crude, would that have been a signal for us?
61 to 62 has been an inflection point for the market for the better part of the last year. If we can defend that, I think there's a good risk-reward trade to the upside here. We did have an OPEC meeting over the weekend. Production increases were slightly less than feared, so you're seeing a little bit of momentum to the upside. But I think putting some wind in that sail might be concerns over global growth potentially slowing down. So you're seeing a little bit of a pop, but potential growth concerns limiting the upside risk in that trade. If we do close below 60, I wouldn't be surprised to see that spur some additional selling momentum.
And we wrap up there with nat gas down 6% year to date, but has had a pretty good run over the past month, up 12%. Oliver Slope is with Blue Line Futures. By the way, Oliver, congratulations, brand new dad. They
brand
welcome
new dad.
welcomed Harrison on the 26th, right?
That is correct. Harrison and Arthur, two best friends now.
Well, maybe next time I'll still refer to you as Oliver instead of Arthur and Harrison's dad. But congratulations, Mom and baby doing well. That's Oliver Slope with Blue Line Futures.